Wednesday, November 9th, market analysis, Stan Ehrlich. Good morning, 9:30 California time, halfway through the day or so. We always start with the S&P 500, the spider in particular, the ETF for it. And we have basically an inside trading range day, which means no higher high or lower low, except we did make a slightly lower low a little while ago, an hour or two ago. We are down close to 4 points. This is below the close of the last couple of days, a minor dip at this particular point. I think the bigger picture is the head and shoulder bottom that was built in October with the seasonal October lows this year producing a blatantly obvious ER signal, bullish engulfing green on October 13th signal, which produced a darn good rally until a minor bearish engulfing, but not an official sell signal on November 1st. And we had a bit of a break, which came down to the neckline. And now we're coming back up again, except for today. We have a little bit of a dip so far. I still think the minimum upside objective on this bullish head and shoulder bottom, formed again mostly in October, is 403. And I also look for 410 potential rally high during the next several weeks, coming into late November or maybe early December. So I'm modestly bullish, not fantastically. We're a little under 380, so 25 points, maybe 30 in the next few weeks. Remember, bull markets climb much slower than bull markets go up. Than bear markets go down. Bull markets are known to climb a wall of worry. They don't go up as fast as bear markets collapse. So I'm not surprised to see the market dipping off a little bit here today. And it may even be one more day, but not much of a break. I don't expect it to break below the low which was made on November 3rd. And that price was 368.79. So I am looking for relative stability and the rally to continue, which would be a close above yesterday's high. That would lead almost certainly within a matter of hours or a day or two to a new high for the whole move up since the October 13th October lows. Remember, the October lows, as I was talking about, a month to 2 months in advance of October, has a reliability, and still does, of course, added to by this October working again, of around 90% in the last 30 plus years. Very reliable seasonal tendency. And in particular, my trading system, 100% automated trading system, picked off the October lows just great. And we either bought it on October 13th or we bought it on the 14th when it came down to our trigger dots, the green dots. During this time, the DIA, the Dow Jones Industrial ETF, whoops, I did a boo-boo there. Let me see if I can salvage my little problem real quick. Oh, thank goodness. Had a double bottom formation in the DIA, the second low of which was a bullish engulfing, but not quite an ER Ehrlich reversal signal. Nevertheless, the double bottom worked very well. Minimum upside objective has been surpassed already, and that was surpassed on October 27th. We had two bearish engulfings that only worked for a day, went down nicely on November 3rd, but since then we've seen higher highs and a rally high yesterday above the high of the bearish engulfings, canceling out the signals, adding to the likelihood that the double bottom bullish formation is going to produce more strength And I am expecting at least this very old gap to be closed, which would be a rally up to 336.15, which isn't much. Currently trading, even though it's down on the day, almost 3 points, it's still trading at 328.92. So 329, all I'm looking for is 336 or a bit higher. Maybe a challenge of the high that was made way back on August 16th, but not a heck of a lot more, not a major long-term bullish move, just a matter of a few weeks. The QQQs, something similar. It formed what looked like a legitimate head and shoulder bottom, but the few days ago, price range was below the neckline 100%, killing the head and shoulder bottom. And now we have maybe a broader double bottom from October to early November, simply a major support area that could cause an upside breakout. We need to close above 284 in order to have a bullish breakout relative to the bottom formation that's developing here since late September. So I do think all the indexes have bullish potentials. The one that's acting the best and seems to be the most predictable is the S&P at the moment. So for a stock market index point of view, I'm friendly. I don't want to use the word bullish for the next few weeks, several weeks, and then a longer-term downside objective in the S&P would be 320. I have been bearish since the first 3 months of this year. So I remain bearish on a long-term basis. And by the way, my trading system picked off the exact top of the market on November 22nd for the QQQ, the beginning day for this long-term bear market. We also have similar spectacular buy or sell signals in the other indexes as well. Looking at the DIA, we picked off the top of the market back on January 5th. Again, the top of the market to the exact day, sell signal. And for the spider, going backward here, looking at the longer term chart, we have a sell signal not on the top, but in November 22nd, during November 22nd, we had a signal that lasted for a few weeks. Unfortunately, we didn't get our signal on the very top, but we did get an excellent sell signal on April 5th that was just prior to a very, very big decline. All right. Hey, let's look at futures. I skipped them yesterday because of a little problem I was having. 10-year notes are rallying for a couple of days and look like they're forming a little bit of a bottom. I talk about base building activity. When this chart goes up, rates go down. So on a day-to-day basis, it would look like things are stabilizing a little bit. The long-term 30-year long bond has the same 2 or 3, 4 days worth of new highs, slightly higher prices on a closing basis if it stayed here. Nothing particularly dramatic, possible double bottom. Let's look at the crude oil, and I'm going to start blowing up the charts full screen. I talked about resistance and market being relatively neutral. I can't make a definitive decision here, although we did get some sell signals back at the turning point, which was June 14th at a high, the beginning of the bear move in the crude oil. Summer gasoline price highs. Actually, we got a total of 3 of them. The one in the middle, basically, that one was the highest high. Next, we're looking at natural gas. Pick the top of the market with a fantastic sell signal. Bearish because the trend is, and we've broken support and resistance, stopped on a rally. Couple of sharp down days here. I think we're going to see new lows to the trend very soon. Live hogs. Broader resistance, stopped the rally, got an excellent signal back here on August 16th. I'm a little bearish on live hogs for the moment. No particular brand new signals. Oh yeah, and I also picked, the system picked, the top of the market back on February 23. So these signals can be extremely profound and be the beginning of major big moves or small moves. And the ones that don't work, and some of them don't work, we take small losses. We're out as soon as there is a new high or a new low since the signal day. So the risks are not very large. The rewards can be very great for position trades, and really nice too for swing trades that will last a few days. We got a sell signal yesterday in heating oil, brand new sell signal yesterday. I talked about it. Today we're down nicely, nothing fantastic, but again, this could be the beginning of something much more profound. I can't tell yet. We do have new highs in prices, but not new highs in the indicators, which is referred to as a divergence. And that is one additional bearish technical tool. Next chart. Soybean meal. 2 days ago, we got a sell signal. Now the market, after yesterday's fairly flat day, are starting to move down a little bit. We're lower than yesterday's low. The high is lower than yesterday's high. Current quotes are lower than the last 2 days. And I need to break down below 413.5 in order to kind of verify the bearish signal is going to work even better. Right now, it looks like it's going to. I have no reason to believe why this ER sell signal is going to fail. But the stop would be in the ballpark of 423.40. We got an excellent buy signal at the bottom here. Next chart. We're looking at soybeans, and today we have a bearish engulfing happening at the moment. Today's high is higher than yesterday's high. Today's low is lower than yesterday's low, creating the engulfing. We are currently down a very small amount, making it an outside down day or a bearish engulfing. We were overbought recently, so that puts those features put together, create my underlying signal. We do use a customized RSI. We do use a variation on the bearish engulfing. So it's not exactly what the textbooks would tell you. So it's a brand new sell signal in soybeans. Let's see how this works out in the next week or two. The risk would be a stop above today's high so far. Next, we have coffee. New low for the trend. Major downside breakout a couple of weeks ago. Periodically, we're getting oversold, but no signals. So I have to maintain a bearish attitude because of the very large trading range we've broken out of to the downside. Quite a substantial time frame. Next, 10-year notes, we talked about it. Next, bonds, we talked about it. Next, new highs, getting a little overbought on silver. So I'm expecting a little bit of a downside retracement, but we have a bottom formation that's looking pretty good. We have new highs for a few months since July, and it looks like silver is gaining some strength on the average. I wouldn't buy it right here. I'd look to be buying probably below 20.9, maybe down to 20. Next chart. Gold has a double, some people might say a triple bottom. Triple bottoms are extremely rare. But hey, it looks like it. We got a beautiful buy signal in the first low of this formation. Of course, at the time, you don't know that it's going to make a triple bottom. All you know is that this works most of the time and that the market should start going up in some way, shape, or form. Now, what would make me a lot happier is to close above the rally high we saw on October 4th. And that price would be closing above $1,738.70. So we don't have too far to go to do that. We're slightly overbought at the moment. I'm bullish on gold because of the bottom formation that's been building since late September. Next, bearish engulfings on the 10-year notes. I'm sorry, on the YM, the Dow Jones, did not work. I'm disappointed in these. Would work for a day, but that's not very much. There's a little bit of money to have been made. We're now overbought again. But today, as I mentioned before at the beginning, is an inside trading range day, no higher, no lower so far. Just a little downside correction from being overbought. Next chart. Wheat. I've got to point out the whopper of a sell signal on the top of the wheat market because of the war that started back in March. And wheat being a big crop was devastatedly affected by the war. But we did pick the high day and the beginning of the bear trend in wheat. We had another great sell signal shortly after the highest high on May 24th. I'm neutral. I think it's probably going to work its way a little bit lower, but it can't be particularly aggressive on the short side. We're getting fairly close to being oversold, not quite. Next chart. Corn, neutral to basically a little bearish, but momentarily we hit oversold conditions, so we're going to bounce slightly for a few days and then probably start to come down and make some lower lows again. We picked off a major long-term bottom way back in September of last year, a little over a year ago, that proved to be a whopper of a huge bull move that lasted many months. Next, pick the top of the platinum market to the day back on March 9th. Also got a few good sell signals here in the last few months since August. 3 of them all produced good breaks and 1 good buy signal. So that's 4 in a row in the last few months. Right now it's overbought. Might have a bearish engulfing, but not yet. I'm looking for a little retracement, but the trend is up lately, so I'm friendly. Excuse me. High-grade copper. We picked the last turning point on September 28th, having a little trouble getting above recent highs made in August. So maybe a small pullback, but I'm friendly to copper. I think it has higher levels, maybe way up to about 1.4 or 4.1, excuse me. We'll see. I like the looks of the chart. Of course, we picked the top of the market to the exact day, March 7th of 22. Next chart. Got overbought for a couple of weeks here, which is a very substantial amount of time in soybean oil. I pointed it out almost every single day. Now we're seeing the market start to slip a little bit, but it's not very much so far. We also banged into an area of resistance starting at 74, but it lasts all the way up to about 79 3/4. So we're in that area, and I think it's in the process of topping out somewhat. Can't be too bearish about it yet, but I'm looking for a little bit lower levels on soybean oil. Next, rough rice. Like soybean oil used to be, this is very overbought at the moment, and at any time it could turn down very nicely. So I'm looking for a sell signal. I haven't got one quite yet. I wouldn't be a buyer, that's for sure. Next, oats, neutral. Next, OJ was overbought, pulled down a little, trend is still up. I wouldn't be a buyer. I'd wait for more of a correction. I think it's going to correct back down some very soon. Cocoa, hey, same story exactly. And today's high is starting to bump up against some more significant resistance. So it should turn down very, very soon here in cocoa. Next, sugar, overbought, looking for a downside correction. We picked the exact high, of course, on April 13th, and we picked the exact low for a month or two earlier and a few months after on June 21 of 21. And recently we had an excellent sell signal on October 17th of this year, just a month ago. So right now, overbought, broad area of resistance, looking for it to have a small downside correction. Next, cattle, got overbought, topped out, no signals per se, pulled down, came back up a little, and is now dropping quite a bit today. I think it's going to see slightly lower levels, 149, 147, 148 in the next few weeks. We did pick off a major turning point. It was really great on September 29th. And a few others earlier. Red cell signal right here before it gapped down like crazy. This lasted a couple of weeks. This lasted a couple of days. Next chart. Crude. Talked about this before. Fairly neutral. And I think that does it in futures. Got two other things to discuss real quick. Forex. Dollar index, we picked the damn high of the market, and we have just made yesterday new lows since we picked the top of the market, September 28th. Period. Next, euro dollar, we picked the bottom of the market on September 28th. We're almost seeing new highs. I don't think, barely maybe, yesterday, and I'm looking for higher levels in the euro dollar. Let's go through the dollar yen. I've got a top on October 21, and so far so good. Worked out great so far. Next, that would be British pound against the dollar. Good buy signal, almost on the low. Still friendly, looking for higher levels. Aussie dollar against the US, Australian against the US. We got several buy signals around and including the exact low day. Yesterday was a new high. Since then, I'm looking for higher levels. Dollar against the Canadian dollar, sell signal on top. The ER signals are doing great in the currency markets, the forex markets, and a new low since that high. US dollar against the Swiss franc picked off a great bottom only a few days after a great sell signal. And we've got a few signals in this chart that's a little over a year, a little under a year actually, that have been absolutely great. Nothing lately, unfortunately. Last euro against the pound, nothing recent. I'm going to jump to the last group of sector symbols. This is the banking sector. We picked off a bullish engulfing at the low of the break. And the low for SMH, which is semiconductor, also the low. And I believe that's October 13th. In both cases it is. When the overall market's also turned around, not a surprise then. At the very bottom, next, we were oversold on October 13th, but we didn't get our bullish engulfing, so we don't have the signal. But we did pick the first high of a double top on August 19th. Great sell signal up there. Next, we have a excellent buy signal that lasted a couple of weeks, and now it's being challenged. So maybe we're going to have a double bottom. We're a little oversold. Can't say. I'm just going to pass on this until I get something definitive. And lastly, ITB. No signals recently. Picked off the top of the market way back. December 13th of 21 was a great signal. I'm going to leave you with these sector symbols and signals. Have a great trading day. Stan Ehrlich. Thank you very much. See you tomorrow.